This meeting is being recorded.
We're just a couple minutes before noon. I'm going to give people a little bit more time to join on. I'm going to keep it open for about another 2 minutes before we start presenting.
Okay, thank you.
Okay, well, Amy, I know you have a hard out at 1, so Tony, if you want to get us started, we can get ready to go here.
Okay, thanks, Megan. Well, good afternoon, everyone, or good morning to any of our friends outside of the Eastern time zone. Welcome to our Business Academy on the topic of municipal income tax. We're happy that Chief Legal Counsel Amy Arrighi from the Regional Income Tax Agency could join us today and present this timely and hot topic in the tax world. This webinar is pending an hour of CLE credit for the lawyers on the call or on the Zoom, and there'll also be a 1 hour of CPE for the CPAs. There'll be an evaluation later with a secret word toward the end of the presentation, so that we all stay tuned for the whole presentation, but we'll get that out to you, get that back to us, and then we'll get certificates out for the accountants, and then for the lawyers, we will submit the hour for you through our portal. So with that, thanks again, Amy, for agreeing to do this for us, and I'll turn it over to you.
Thank you, Tony. And thank you to the Chamber, Tony and Megan, for inviting me to present on this topic. Not the first time that I've presented on this topic over the last several months, definitely something on everyone's mind. Also, just want to congratulate you guys on a great tax conference just a few weeks ago. Took that over pretty quick, and it was nice to see everyone in person again. So we appreciate that, and kudos to you on that. As Tony mentioned, or Megan, I do have a hard stop at 1. I know we're set to end at 1 anyway, but I just wanted to mention that. I will do my best to watch for questions in the chat. I will tell you that I'm working from home today, and with some of the issues here, I'm seeing my slides, but not necessarily the chat box. So I may shut down my slides every once in a while to check the chat box for questions. But if I don't get to your questions, I've offered to Tony and Megan to follow up with written answers where I can to anything that we don't get to today. So with that, I will jump right in. And I just want to point out, Rita is 50 years old, right? So I always like to say Starbucks, Disney, Rita, right? All good stuff. All right, so let's get going here. We'll just kind of lay the groundwork for what we're talking about and how we got here. So as you all know, Ohio made some changes to the law in response to COVID-19 that permitted employers to withhold municipal income tax from their employees' wages as if those employees were still working in the office, regardless of where they were working in response to COVID. So I've been kind of calling this the pretend withholding. So for 2020, most of 2020 and all of 2021, employers and we were permitted to pretend that people were still working in the office, even if they were working somewhere else. So as you know, that rule ended at the end of last year in 2021. And starting on January 1st, we went back to the old municipal income tax rules. So, what are those old rules? Well, the basic rule is, taxes due where work is performed, right? So there's that rule. And for most employers and employees prior to the pandemic, that really wasn't too difficult. For a lot of employers where employees just showed up in the same place every day and did their work, employers withheld for that workplace and all was fine. There are some exceptions to that basic rule. First being the occasional entrant rule, or sometimes you hear that referred to as the 20-day rule. And this rule helps employers that have employees working in different locations other than their normal workplace. And it gives employers some guidance about when they have to withhold municipal income tax for those other locations where their employees are performing work that's outside of the normal workplace. And the other exception we have is a small employer rule. And this rule has been around at least since 2016, and it kind of came with that 20-day occasional entrant rule. And what the small employer rule says is if you are an employer that had in the previous calendar year less than $500,000 in gross revenue, you are considered a small employer. And as a small employer, your only withholding obligation is to withhold municipal income tax from your employees' wages for where your location is, where your office or storefront or warehouse, wherever the employer does its business and has its fixed location. The employer can simply withhold municipal income tax as if everyone works in that spot, even if they don't. And that's been the rule for quite some time. So that's also an exception to what our old rules have been. So it's kind of a help for employers that maybe don't have the ability to do the tracking. And so this provision's been in the law for some time to assist smaller employers where maybe the burden of tracking would be a little bit more than some employers who are larger. So we're back to our old rules, but we got brand new schedules for workers, right? So we'll kind of just run through. These first two are kind of the easy button schedules and how you handle withholding for these two groups of employees. You know, if you have employees who are now fully remote, they only work from home, they're not coming to the office. Thinking back to the basic rule that taxes due where work is performed, the withholding for those employees would be at the rate and for the municipality where they live, if they live in a taxing jurisdiction. And that would be treated just like a workplace. You know, you don't have to worry about what the credit is there or anything like that. If employers are working fully remote from their homes, the withholding is simply for the municipality where they live at the full rate, just like a workplace. The other easy button, I guess, obviously, is if people are fully back in the office. And so you're withholding like it's March 8th of 2020, pre-pandemic, and you're withholding for them showing up at the office. So those obviously kind of the easy button rules here. But here's the one that's causing some issues, right? So you have your hybrid schedules. And I will tell you that for the last, I don't know, 6 months or more, myself and others at RITA, we have fielded many calls from employers, from accountants and attorneys on behalf of employers, you know, struggling with how they're going to comply with the law with their hybrid employees. And so this is what, you know, we're hearing from employers. And first of all, what we're hearing and the fact that they're reaching out, this tells us, you know, obviously these employers, they want to get it right. Not only do they want to make sure they're in compliance with the law, but they want to get things right for their employees in doing the right thing with withholding. And so we've heard lots of different ways that employers are dealing with their hybrid workforce and also being compliant with municipal income tax withholding. We've heard from employers who said, you know, look, our payroll software will tell us every single day where an employee is working. They log in, they select their location, that, you know, goes up to payroll. Payroll knows to withhold tax for that location for that day. And we're tracking it day by day by day. Great, right? That complies with the law. Tax is being withheld where work is being performed. Not everyone has that going on. In fact, that's probably the minority of what we heard. What we've heard more is, you know, employers trying to come up with a reasonable way to comply with the law. And I will tell you, just from our perspective, RITA, we're an employer in Ohio. We have to follow all the same rules that every other employer does. And, you know, if anyone's got to get it right, it's us, right? We do have hybrid employees. I'm one of them. I'm in my house today. So if you hear weird noises, or my Roomba was talking before, but I'm working at home today. So I have a hybrid schedule. What we're doing for our employees, we looked at agency-wide what the average hybrid schedule is across the agency. And what we determined that the average hybrid schedule is 2 days in the office, 3 days at home for employees who had hybrid schedules. And what we've done is we've prorated wages based on that average. So every employee for RITA who's working a hybrid schedule has 40% of their wages withheld for the office, so Brecksville, Youngstown, Worthington, and the 60% of their wages are withheld for their home location. I'm sitting in beautiful Strongsville, Ohio right now. They're getting tax withheld on 60% of my wages. 40% are being withheld to Brecksville, which is where I normally report. So we are not tracking our employees every single day, every single employee in every place that they are. We came up with this as a reasonable method for us to comply with the law. We did reach out to all of the communities where we have offices. So again, Brecksville, Worthington, Youngstown, to talk to them about what we were doing, why we were doing it, and just making sure that they were aware of what was going to change for us as an employer going forward with withholding. In this situation that I've described for Rita, we're hearing a lot of this from employers. So we've heard they're doing, coming up with averages by department, by building, or, by entity, coming up with an average and prorating based on that average. What we recognize is it's not going to work out 100% perfect for all employees. Some employees come to the office less than 2 days a week. And so it'll be up to the employee really throughout the year to track where they are, if at the end of the year they want to try and make any adjustments, if they've had too much withheld for their office location, to make those adjustments with refund requests. So this is, no big secret. Anytime I've talked about this, been very open about what we're doing as an employer with hybrid employees. And again, we've had to deal with it just like everybody else. We don't qualify as a small employer. A small employer by law cannot be a government. So municipalities aren't small employers, so we don't get the benefit of that rule. But this is the method that we've come up with to make sure that we're compliant with the law in all of the places where we operate. All right, so I think what I'm going to do, and I hope this doesn't get too hokey, I'm going to stop sharing my slides for a second because, like I said, I can't see you or see the Q&A. I see one question. So one question we had already is, what if employees are fully remote, but they come into the office on occasion? So I think that in that case, you'd be looking at more of that occasional entrant rule. They're fully remote. That's their expectation. That's their principal place that they're working now, the place that they're going to spend the most days in the tax year performing work for the employer. And so that withholding would likely continue in that location. If they're coming into the office on some regular basis, you may want to do some tracking there. Or if they come into the office, they wind up being there more than 20 days, then that occasional entrant rule kicks in. So you've got kind of their home is their primary place where they're going to work. Once they've exceeded 20 days working in another location, the withholding would have to switch there. And that goes back to that old 20-day occasional entrant rule. The next question I will try and get back to, it's just a lot of words. So I'm going to go, I think it would take me too long to read it while we're talking. So I'm going to go back and share my screen. My heart goes into my throat every time I do this. I'm sure Tony and Megan feel the same way. Okay, there we go. We all see the slides again. All right, so, obviously these changes, they're huge, right? Or they could be huge. A lot of impacts from changes like this. Everyone from employers, obviously, and employees, but municipalities as well. Employers have new withholding obligations. Employees, their W-2s are going to look different. Their filing in their home municipalities is going to look different. And so we're starting to see a little bit of this shifting in withholding. I can tell you from Rita's perspective, what we're seeing so far is just the very slightest bit of changes. So employers, the withholding that they remitted for January that they sent to us in this past month, or this month in February, not a whole lot of change from January's past. And I think a lot of that may have to do with carryover wages that were earned in December, paid in January, that kind of thing. So I think the real impact of this shifting, where we'll get the picture of how much tax is moving, between places we'll start to see in March, and certainly after the end of the first quarter, for those employers that are only withholding and remitting on a quarterly basis. I have heard from some municipalities that we don't administer, but that their January looked great, but their February coming in from semi-monthly reporters, employers who report to them semi-monthly, that withholding is dropping off the cliff. And so really the impact is really going to depend on the municipalities, what kind of employer makeup they have. You know, a lot of this, as we've been preparing for what's going to happen and how things are going to move, it's really been talked about a lot in terms of a big city problem or a big city issue. You know, the Clevelands and the Columbuses in Cincinnati, and obviously they're going to have a huge impact if people are not coming back to the office, and withholding starts to move to the places where those employees live. But for Rita, what we see in our data, when we tried for our members to estimate the potential impact of this shifting, you know, it's not just a big city issue. There's a community up here in Northeast Ohio, the city of Independence, if any of you are familiar, right off of I-77, just south of Cleveland. Huge corporate office, or huge office presence, lots of office buildings, lots of office workers coming in every day to work pre-pandemic. That community is small in terms of their own residential population, less than 10,000 people, maybe around 7,000 or 8,000 people. Much larger numbers coming in during the day to work. So if those people don't come back, then suddenly that's a small city problem, right? Because there just aren't enough city residents, even if all of them were working at home and their withholding was coming to Independence, there's just less of them than there are people that would normally come there to work. So we started to see even small communities with a lot of office buildings like Independence, or with one large employer, that those communities have the potential to be impacted as well. You know, we've heard from a lot of employers in those communities, and thankfully those employers are aware, you know, of how this shifting is going to work, and they've been good about talking to their municipalities about what their plans are, and so municipalities can start to prepare. Again, we're not seeing it yet; it's a little early, but we're definitely going to be keeping an eye on that, not only for agency-wide impact, but on each individual municipality basis, as we start to see that withholding coming in.
I think Amy is frozen on us. This will be a good time to step in while we work out some technical difficulties. To let you know that the slides will be made available at the end of this hour, and they'll go out with the evaluations, I believe. So, okay, so hopefully we will get Amy back here quickly, and she can step in and answer some of these questions you've posed to us. If we don't get to the questions during this hour, Amy has agreed to review them and get back to you individually and answer them after the session is over, since we have a hard stop at 1. But I hope we actually get Amy back here quickly.
The recording will also be shared out,
Okay.
including this fun technical difficulty of it. Yeah, I think I just saw the question asking if we could send answers to everyone. I think that that's probably going to be the best format where we can just have her answer them in an email and I can send it to all participants who are here today.
No, that's perfect. And we'll answer both what's in the chat box and in the Q&A box as well. We have a number in each spot, so.
It's showing me she's off, so I'm hoping that means she's about to hop back on here.
Okay, maybe we should do the remote or the secret question now
Good
before we
timing.
lose people. So the word today for the CPE and the CLE is remote. So REMOTE, remote. Remember that when you take the evaluation later today. Thank you.
Amy just emailed me. She is trying to join from her phone currently.
I think if she gets, there she is.
I'm so sorry. Hi.
Hey, should we just Do you want us to just maybe try to, I can send, if you see the questions, maybe we just go into the questions and we'll give them the slides later?
Yeah, that's fine. Yes. I don't think that's what did it. Something kicked me off from our network. So but I won't switch back and forth. That's fine. I can see my own slides. And so I
Okay.
can talk to them and then move you around. Sorry about that. I should have known this was not going to work well today. So if you want to go ahead, if we're ready to go.
Yeah, you want me to ask you some questions?
Yep.
Okay. This is, we won't get to all of them, and I'll try to, ones that I know that we can get an easy answer, hopefully easy answer to. So to ease the burden on an employer, could they advise their employee, could you advise the employer to withhold to the principal place of business and then give the employee the option to request a refund at the end of the year? So I guess with that question, that means even if they have a hybrid schedule, I'm just going to over withhold as if they're coming to work every day.
Right. I think practically speaking, I think we're going to see a lot of that. It's not going to be apparent to us until next year when all those employees start asking for refunds, and then we're going to say, what the heck is going on with this employer? Unless the employer is a small employer, they're technically not complying with the law in that case. The tax due is the taxes due where work is performed. I think, like I said, I think we're going to see a lot of that. Employers simply continuing to withhold like they did in the past and leaving it up to the employee to figure it out at the end of the year. And so we'll be watching for that next year. Obviously, I think this is something too that I think the chamber and other business groups and probably the General Assembly, depending on how this year starts to go, there may be some attention paid to this. To exactly that, what is the burden on employers to comply with the rules? Like I said, it's trying to make these new work situations fit into the old tax rule. Sometimes they fit nice and sometimes they don't. So I think probably there'll be some attention to this going forward to see how it's going. At the same time, we're starting to hear more employers talk about bringing people back to the office. Employers that we had heard from that said, look, we don't think we're coming back at all, are saying we're just not getting the productivity that we need to see, and so we're going to start bringing people back. So I think right now it's really uncertain what this is going to look like for municipalities and for employers. But for that specific situation, the employer technically is not complying with the law in that case.
And I worry about that case for an employee. If you don't have a full 100% credit, you may have to let the employee know that they probably have estimated tax payments they probably have to make each quarter, so they don't get hit with such a large tax bill when they file their return. But
yeah, that could be the case for sure.
Right. Here's a question on the principal place of business under ROC 718 can't be an employee's home. Is that a conflict?
No, it can be an employee's home. There's a cascading test that the law calls for determining where an employee's principal place of work is. So the first thing you look at is there a place in Ohio that's owned or controlled by the employer where the employee reports on a regular and ordinary basis? So if for someone who's fully remote, the answer to that question, no, right? So there is no place owned by the employer that they're going every day. All right, so the next test is there a place that they're going that the employer is providing services, maybe for a customer or a client, and is the employee showing up there? And if that answer is no, then where is the employee spending the greatest number of days in the calendar year performing work for the employer? And if that's at their home, then their home is their principal place of work. So it's not, those three things don't compete with each other. It's a cascading, is there this? No, is there this? And the home can be the principal place of work if that's the place that they're spending the greatest amount of time for the employer. during the year.
Right. And it's probably a different analysis if we're talking about the net profit tax but that's a different topic for a different day.
Yes. Yeah. Yes. Yeah. That's the next thing, right?
Right. Yeah, that's the next one we'll do maybe
Right,
this
right.
spring after we see what's going
Yeah.
on.
Yeah.
Here's something that probably falls under the old rules as well. So we have maintenance techs that are assigned 10 to 15 locations each. And let's say they visit 2 or 4 of those locations in a day, but they might not spend the majority of their day at any one location more than 20 times in a year. So, you know, they're parts of days, but not a majority of the day, any one place. They're just all over the place. But it sounds like we've had those situations probably before in the old rules.
So Amy, before you get to that, it does
Yeah.
appear that your computer logged you back on. So I'm seeing 2 feeds
Oh,
of
look
you.
at that. All right. So
The
I'm
position
gonna,
here.
one of me is plenty, right? So maybe what I can do is get the slides back up there. Or at least disconnect my feed. Yeah, sorry about that. The work from home and our network was just like, yeah, we're done with you. So there I am. Look, it reconnected. I'm just gonna close that one and then
Okay.
we'll just kind of, I don't want to mess with it. All right, thank you. So back to your question then, Tony. Yeah, so the situation that the questioner is describing, that's kind of an old 20-day occasional entrant rule question. And the idea behind that rule is that, you know, employees are only considered to be, for withholding purposes, in one place a day, right? So if you have technicians going around doing work in different locations, you know, depending on how much time they're spending traveling between each of those locations, some of that travel time, the law says the employer can treat as if it's being done back at the employer's location. So are they really spending a majority of their day in a place other than the employer's main location? So the easier example to kind of demonstrate that is if you think about like a floral delivery person, or, you know, a Coca-Cola delivery person, or someone who's making deliveries. What the law says is anytime that an employee is, you know, driving around to all the different places where they're performing work, all of that time that they spend driving around and in this case delivering stuff is considered time spent back at the employer's location. So the employer can treat that as if the employee's doing that back at the main office, so to speak. For some of those technician type things, we have employers, some very large employers that have people out doing that kind of stuff. We see W-2s with, you know, withholding for, you know, dozens and dozens of communities. If you think about big telephone companies or cable providers. So we see some that do that, withhold everywhere that employee is going. And then we see some that are really relying on the protection of that rule and understanding that while their technicians are moving about, that they can treat that time as if it's back at the office. But that's kind of an old rule question. Sorry, Tony, we put you to work. Were you going to sit and eat your lunch? Because now you're feeding me.
I was
all
only
your
going to be on for
questions.
5. I was going to be on 5 minutes to introduce you and go to lunch. I'm glad I stayed.
Yeah. Technology. Yeah, sorry.
No worries. I'm a tax person anyway, so I found this would be helpful because we get member questions a lot as we're trying to work through these new rules. So here's a question: if an employee's work location and home location have the same tax rate and 100% reciprocity, do you still have to withhold for both locations? And let's use the Rita example of 2 days in the office, 3 at home.
Yes, I guess the short answer, right? So, you know, the ending math isn't really the issue. It's withholding where the work is being performed. So we have plenty of employees that fall into that category. And we are doing that withholding for both places, for our hybrid folks.
Right. Another one here on what about a hybrid schedule that varies significantly? So in the office all 5 days one week, in for only a day the next, you know, et cetera. And that goes on let's say for the first half of the year, is it acceptable to make an approximation of the employees in and out percentage and let the employee track the time and request a refund if necessary when they file? Or is it on the employer to more closely kind of track the time?
I think where we're seeing employers that are making reasonable prorations based on expected schedules, for us, we've employers who've come to us with that question, we've said that's reasonable to us, that you are making that effort on something that is reasonable to comply with the law. And again, for us as an employer, I've used this example with some of my employees, like, look, if you break your leg and for 4 weeks you don't come to the office, I don't care. We're still withholding on the 40/60, right? We're not, making those adjustments throughout the year. The only adjustment we might make is if, maybe someone's not thriving at home and we make them come back full time to the office, we'll make the adjustment at that time. But our expectation as an employer is that we've set this schedule and this is how we're going to withhold for the year. Even though there might be, a couple nuances here and there, we're leaving that up to the employee to track that for themselves.
Yeah, that's like the old rules. If I broke my leg in the old before times, if I wanted to go seek a refund for those 4 weeks while I sat on my couch, that's up to me. And
Right.
Right.
Well, can we talk about refunds for a second? Because I was
Sure.
going to touch on that.
Yeah.
This is something else employers might be dealing with right now is all your employees want you to sign off on these refund requests, right? What a pain. We are not seeing any big ramp up yet. It's a little early for 2021 refund requests, but we are expecting to see many more than normal this year compared to really any other year. There were some changes made in the law, in the budget bill, that limits what municipalities can ask employers to verify when they're signing off on those refund requests. And there's two things. Number one, they're simply verifying that the employee was in the office on the number of days that the employee says they were in the office. And number two, that the employer hasn't already given that money back to the employee. So we don't expect, and nobody expects the employer to be able to certify where the employee did the work. All they know is they weren't here on these days. And that's up to the employee to report to the tax administrator. I was at home, I was wherever, Florida, wherever I was.
Right.
It's not important for the employer to be able to verify that for employees to get their refunds. We'll be watching that. Obviously, that's another concern municipalities have this year, was kind of like the double whammy with the refund requests coming in from 2021, and also any shifts in withholding that are going to happen. That's all going to happen this year. So obviously, we're watching that closely. For 2020, those refunds are still in a state of flux. What we've seen is about maybe 1,800 refund requests related to tax year 2020 that we're just holding on to right now until we see how the courts resolve the issue. I think a lot of people are waiting. I think if the courts ultimately rule that refunds can happen for 2020, that we'll see many more requests coming in. But right now it's about 1,800 requests for about $2.7 million, which sounds like a lot of money, but we collected $2 billion last year. So it's there isn't one municipality that has, the bulk of that refund request pending. But so those are the 2020. So I think everyone knows the withholding for 2020, the COVID or pretend withholding, there's still a question being decided by the courts whether or not employees can receive a refund of that money. 2021, the General Assembly made it clear employees can get those refunds. And so we're waiting to see how those start to come in. I know for myself, I'm not doing all that paperwork, right? I'm just not going to do it. So I don't know how many employees are going to feel that way. It's just not worth it. I don't care, just move on.
Well, for us that live in townships, we're kind of waiting for that.
Yeah.
But the statute limitation is what, 3 years?
Yes, 3 years.
Yeah.
So I think we'll have an answer from the Supreme Court
Right.
before then. but that's obviously something that people want to keep an eye on if they're waiting.
Right.
Um,
And to let participants know, Rita administers tax for 405 jurisdictions, and you're in 78 of 88 counties. So you can really start to see some of the trends that will kind of help us as we map a future in the General Assembly, depending on what we see post-COVID. But here's a question. They said they're fully remote right now, with some staff going to an office a few hours a week to pick up mail, et cetera. So would we fall under the occasional entrant? And then in future years, they'll go to a hybrid schedule, or it sounds like a hybrid schedule later this year. So I guess let's call it for the first half of the year, they're still remote. First 6 months of your filing, it looks like everyone's remote, maybe picking up the mail. I guess you would withhold there from the remote locations, right?
Right. So that to me sounds like, those are remote employees. You'd be looking at that occasional entrant rule. How often are they coming to the office? But you would be comfortable, I would say, withholding for the remote location while that's the work situation, and then making that switch when the work location changes for the employees going forward.
Here's a question. Shouldn't we only have to set up home locations for staff with home addresses outside of Columbus, Ohio, where our building is? Did we determine which other localities have a reciprocal agreement with Columbus so that we don't need to code those separately?
Yeah, reciprocity. So the reciprocity is not a thing anymore. So
Okay.
the way that works is each individual suburb of Columbus, or really every individual municipality, determines if they're going to give a credit to their residents for tax they pay somewhere else. So there aren't agreements between Columbus and other cities, or between any cities for reciprocation. It's credits. And I think we talked about this a few minutes ago. It doesn't really matter what the credit structure is where your employee is working from home. That working from home is if you think about it, is more like a second workplace than a residence withholding at that point, because it's somewhere where they're performing work. So the credit structure in that case is not going to matter when the home is a workplace, because you're just withholding at the full rate.
Okay. Here's a question on any thoughts on the record requirements some of the larger cities are imposing to obtain refunds, like CCA asking for telework agreements, hourly summaries, employer certifications, etc. It seems like it could present a problem for employers. Again, here, I think this is just we just don't have the law in place to say, how do we document the hybrid situation or a new remote schedule? So we're almost really kind of relying on either individual cities, CCA, or RITA to kind of give us the guidance, right?
Yeah. And I will say, obviously I can't speak to what CCA might be, asking taxpayers to do. I can say for us, we're trying to be reasonable, right? We recognize this is new for everybody, including us.
Right.
And so we're doing our best to work with employers to again, help you comply with the law, come up with something that's reasonable for you as an employer, as well as for your employees. So, and I would encourage, people at the office will hate this, but call us. I've talked to tons of employers and CPAs and attorneys for employers. Our business department is ready to answer these questions. If you call our office, and I'll just throw out, it's an extension 5003, that's our business department. And if you're struggling with this issue in a RITA municipality, call us. And our goal is to be reasonable on this topic. We understand.
And we'll get you the slides with all the contact information as well at the end of this.
Yeah. Sorry about that.
No worries.
I may never work at home again, because this is just like epic fail.
So no, these things happen, especially with the weather front approaching us. On the occasional entrant rule, how are the 20 days defined? Per year or in a row?
Per year. So they don't have to be consecutive. It's any 20 days in a calendar year. at any time.
Perfect. And then what was the second thing employers are verifying for tax refunds in 2021?
I can't remember which I said first, so I'll say them both. One is you're verifying how many days the employee says that they did report to the office. And number two, you're verifying that you have not already refunded the money to the employee or made some other adjustment to get them that money separately. So those are the only two things for 2021 for COVID or pretend withholding that tax administrators can ask employers to certify. I will say on that real quick, we have heard from some employees and employers, well, actually employees say, my employer refuses to sign this.
Mhm.
I don't know what, don't do that. That's mean, right? So to sign their refund. But,
No,
but it's
I think
important
some of the,
to have that.
yeah, I think you might see that with larger employers that may have a lot of employees.
Yeah.
So I know it's
We-
not nice for have the employee get hit with that, but right.
So we have heard from employers, and this one I'll just kind of tag on to that. Large employers that have contacted us to say, we don't have time to sign all this stuff. So we've worked with several employers where they've come up with a template that they're printing off of their own company letterhead that tells us what we need to know and what
Yeah.
we need to have to issue that refund.
Okay.
And they're having the employee attach it to the refund request that they submit. And that's fine with us. We don't care if it's on the same piece of paper or if it's stapled, right? So we just need the information.
No,
So we're trying to work with.
That's a good filing tip there for those large employers that may have someone on the phone right now or on this call. This looks kind of like an old algebra problem, but I'll try to get through it.
Oh God. All right.
So if an employee spends 20% of the day working remotely from home, 30% of the day, 25% of the day in meeting in city B, and then 25% of the day at a meeting in city C, would we withhold taxes from city A where the majority of that percentage has occurred, or from working from home?
Yeah, I think, I don't know how many lawyers are on here, but I like to tell people I went to law school, so I wouldn't have to do math. So let me just say that for a scenario like that, regardless of how those numbers shake out, I mean, the first thing you're really looking at is where is the employee's principal place of work, right? So again, that cascading test that I talked about.
Right.
And so if their principal place of work is determined to be their home because they're fully remote, that's the place they work the most number of days for the employer, then you say, okay, that's their principal place of work, great. And all these other places that they're going, where are they spending that day, the most time in that day? And is it more than 20 days that they've been in that other place, whether or not you have to withhold? So that's really the examination, where is the principal place of work? Is it home? And all these other places that they're going during the day, where are they spending the most time that day? And have they been in that place more than 20 days? And so you fall back into that old occasional interval. So maybe I'll do the math when I see it in writing, but that's just generally how that would work.
Well, to this question, it looks like the majority of your day in this day is spent in city A. So that's the first level, I think, of your analysis. The second is, do you go to city A at least 20 days out of the year to trigger the withholding? Right.
So if city A is the most for that day, then yes, that would be the question. Have you been there 20 days already? No, then don't worry about it. You withhold for the principal place of work. If it's more than 20, if this is the 21st day or greater, then you should be withholding for city A.
And then assuming you reach the 20-day threshold, do you start to prorate between the two tax jurisdictions, your principal place, and then in this case, like city A, or so maybe you don't have a formal hybrid situation, but once you hit that 20 days, you start to prorate. Is that correct?
Right. So the 20-day rule really involves tracking, right? So, if it's in that last example, city A, that's my 21st day of being there,
Mhm.
then I should withhold on the wages earned on that day in that city. So you don't prorate the day between municipalities, but you could be in a situation where, their principal place of work is Brecksville, and maybe this is the 21st day that they've worked in Columbus, then you should withhold Columbus for that day. So you don't prorate during the day, one place, one day.
Okay. Got it. All right. We've got a question here. Most of my clients don't have a payroll tax department, nor have a mechanism to track day-to-day work locations. Some have employees that work from home some days, in the office, other states, travel, What do you recommend we advise these employers for employee withholding?
Well, first thing I would do is conduct this analysis about whether or not they qualify as a small employer, right? Because that, if they do and have that fewer under 500,000 in revenue, then they can just simply withhold where their office location is. If they don't, the way the question is described, it seems like almost this is a situation that maybe was happening before COVID as well. I guess I can give you the technical complying with the law answer is you got to follow the occasional entrant rule, and you got to be able to track if you're not a small employer. I think what happens in practice, honestly, is they withhold for the one place and then they let the employees figure it out. That's not the right way. It's not what the law says. But I think what we see coming in as an administrator is often what we see. But the first thing I would do for an employer like that is make that analysis. Do they qualify as a small employer so that they don't have to worry about the tracking?
And now that Megan's back on, we're going to put a plug in for doing another one of these for the net profits piece of this. But we have a question. Could you address the apportionment issue for the employer's net profit returns now that we have employees working from home?
Sure. Okay, so Ohio municipal net profits, right? We know that you allocate that on a formula of property, payroll, sales. So let's talk about payroll, right? Because you would think that's the problem. It's not. So what the law says is you have to allocate payroll. If you haven't, if you're paying wages to employees for work they're performing at a location that's owned or controlled by the employer or the employer's clients or customers, right? So that's not the employee's home, right? You don't control that. You want to, but you don't. So you don't have, I don't think that the law would support saying that you have a payroll factor in each municipality where your employees are working from home. So like, oh, hooray, we're done. We're not done. The issue comes from property, right? So, and granted, de minimis, I understand, but does the employer have laptops, printers, phones, other personal property in the employees' homes that suddenly they've got a property factor in those employees' homes? So I think that's really going to be the issue that comes up. Not so much, not the payroll, but what property the employer has in those.
Could you avoid that apportionment factor by giving someone an allowance of money to go out and buy things they need for the home? So now it's technically owned by the employee.
Yeah, probably, right? If the property is not owned by the employer, then the employer doesn't have property there. Okay. So I think with the net profit, that's going to be the unknown. Now the other piece too is the sales, and that one, that really depends what the employee is doing at home. So I think about this in terms of lawyers, accountants, architects, people who are performing services for which the employer is being compensated. So they're not selling stuff, obviously, there, but they're generating sales or services out of that location. And so the employer could also have a sales factor in the location where their employees are working from home. So you would think it's the payroll. It's not the payroll. It's the other two
Yep.
things that are going to be the issue on that.
Yeah, it's almost like the old federal 8627 or whatever that rule was of
Yeah, yeah.
what's that employee doing? Are
Right.
you executing contracts? Are you, those sort of things from your home? You have to probably pay attention to
Yeah.
those sort of things.
Right. So that's going to be an issue. Tony, I'm so glad we were able to do this way, and I'm sorry that
No,
I lost
I
a
know
couple
we've got a
minutes there
hard
while I was-
stop for you here coming up. So I want to tell everyone on the phone, thanks for, the questions, those that we didn't get to, we'll read through those and we'll get those out and we'll get those to everyone. Is there a written instruction for the new withholding rules like Circular E? I don't think so. But we'll answer that question as well as we go through them.
Yeah,
We'll get the questions and answers that we didn't get to out to everyone. They may come at a later time. I want to give Amy and her staff time to think about some of those. So that what we will send out are the slides and the evaluation for everyone. Again, the special word of the day is remote. Use that on your evaluation. And then we'll get out your certificates showing you the CPE hours. We're pending the CLE. We hope to hear from the Supreme Court here in the next week on those. So again,
yeah, I'm happy to help you guys with the questions. I apologize for the technical difficulties I had, and happy to do it again if we need this. An hour is never enough time to talk about this stuff. There's so many questions, and I'm happy to help answer them separately in writing for you guys.
All right. Thanks, Amy, for your time today. And we look forward to probably putting something on again here this year yet on net profits maybe, and we'll also revisit this issue. So thanks everyone for spending an hour with us, and look for the evaluation in the slides here shortly. So have a good day. Thanks for joining us.
Thank you, everyone.
Thanks, everyone.